Hey traders, this is Ron Haidt at Market Tamer. Happy Monday. Hope you guys had a fantastic day. As always, nothing in this presentation shall constitute a recommendation to buy or selling security. Trading stock options involves risk and specific financial issues should always be addressed with your financial advisor. We'll kick off here with the Dow ETF, the diamonds, about a buck. Dow's up basically 100 points. And we closed about 20 cents or so above the 20-day EMA. It's not a whole lot, but it is what it is. We did do it. Volume was later today. We got a doji, which shows indecision, but the trend is still up. So now the bulls have the edge over the 5-day EMA in blue, 5-day period, and now a 20-day period as well, albeit by only 20 cents or so. If we close back below both these lines, then all the short-term time frames go back to being bearish, and we get below this low, and then boom, this becomes the next target. If we keep pushing higher here, target the old ledge, which is going to be coming in here another day or two, right with that 50-day. So when I say ballpark 243, that's about 800, 700 points higher right now in the Dow itself, or 7-8 bucks in the diamonds. That is the upside target at this stage. Now, if we go on to the SPY and I zoom in here, this was more of a solid close above the 20-day EMA in red, but we're still, underperforming the Dow. This is the old support area. We're now just getting back up into it. In fact, we literally got into it and closed back at the bottom side of it for what it's worth. If we go to the Qs and we zoom in, we're now getting back above it. Target is the 50-day. So we solidly closed over the 20-day EMA rate today. Right now, 162.50. We're at 140, 158. About $4+ a little more than maybe 2.5%, 3% would be the upside target. And whether it's the SPY, the Qs, same thing. You go up here to resistance. Support is down here at this little 1-day swing low. It's not much support, but again, just like the Dow, if the Qs roll over here and get below both moving averages, we take out this area, boom, right down here is the next low. And what you'll see sometimes is if we do roll over here, one big candle could literally get us down there. It doesn't take that much. And then let's take a look at the IWM, which had a really strong day, up 1.75%. Good volume as well. Target 50-day 145, still about 4.5 bucks, basically double of what today's move was. So about 3.5% higher. Not a bad day for the markets. Now, how about this stock? Netflix. It's been getting bad press lately. There's been some articles out there that are frankly quite negative on the stock, but you know how I feel about that stuff. I put my fingers in my ears. I start humming my favorite song. It's all irrelevant. We were coming down pretty hard, and then all of a sudden, just like with the whole market, we started to catch a little bit of a bid the day after Christmas. But then here, as the calendar turns to January, we start going up a little more, and then we start launching the past 2 days. This was expected. This is what happens to this stock this time of year. I can't stress it enough. If you were wondering, gee, I wonder what's going to go higher in January, and the market was crumbling in December. Well, there was one stock that I'm going to talk to you guys about on Wednesday. I've already divulged it in another video. It's 5 for 5 just the last 5 years alone. This year it's going up again. Here's another stock, Netflix. You even go back to last year, you can see that launch. The month of January is typically good for Netflix. You get into February, it's even better from a percentage standpoint. Once the money starts coming in, that is the big, quote, institutional footprint I think we're looking for. But if you go just by its historical data, Netflix is a rock star this time of year. And if you had known that, you would have been ready to expect that kind of explosion. You're talking about over a $40 rip, almost near 50. That's 17% or so move right on schedule again and again. So ask yourself this question: did you expect Netflix? How priceless would that information be to have that list of stocks that typically go up or down any time of the year, and when to be laser focused and ready for them? That's why you need to be at this event. That's why I brought the slide back up. At Financial, I can show you this. Please register. We started with 500 seats. That's the max registration. We're already past 330, 340. We're only down to about 150 seats, and I've only sent out one email and done one video. We might max out tomorrow or maybe even tonight yet. Please don't wait. There's a link at the bottom of this video on the YouTube page. Just click more info. The link will then pop up below the video, or if I've sent you an email Or if you don't even know how to get the invite, you could reply to the email, send an email. We'll get you that invitation, whether you want to send it to care@financial.com or send it to cs@markettamer.com. However you heard about this video, please register, please be there, and then I'll unveil within the first 5 minutes the hottest stocks, period. Not based on my opinion, hard proven data. You can't afford to miss it. There's already 2 that did the same thing last year, and here they go again right now. So enough about Netflix. We'll talk more about that on Wednesday. How about another stock that's doing well? That's Amazon. It tacked on 54 points. Sounds really big, but it's only about a 3.5% move. But you know what it did do? It took out the 50-day SMA. So we had this high wave doji down here, which basically is, I like this type of pattern. Big down day, big red bar, followed by high wave doji indecision, and a big up bar, black bar. This is like a U-turn. And now we're pushing higher, targets the 200-day. Then you go back to this basically double, triple top area around 1775. And then frankly, back up here is the target. So my, oh my, what just a couple days in the end of January, the end of December, beginning of January can do, but the market's starting to turn higher. I cannot say though, across everything if the bottom is in. I wish there was more volume. I got a sneaky feeling about this, but trade what you see, not what you think, right? And something I love to teach too at Market Tamer is, if I want to be bullish on something, let's say whether it's the diamonds or Amazon or the SPY, I don't have to go with a big position if I don't feel that comfortable, which is why paper trading is so valuable, virtual trading. I could practice. I can say, you know what, if my normal lot size was 1,000 shares or 500 shares, maybe I just go with 100 or 200 now. Maybe if my normal lot size was 10 call contracts on a bullish trade idea, maybe I just do 3. I can still do something. I don't have the full position, and that way, if the market just ends up falling out of bed again, we can get stopped out and not lose on a regular size position. We lose on a small size position. If I was trading like the diamonds or Amazon right now, just picking different things, I would consider the 20-day EMA as a potential trailing stop here on Amazon. And then if I go back to the Dow, the 20 days here. So that's really tough to use as a trailing stop, right? Well, in this case, I would just go back to the most recent swing low. So Amazon's far enough above its 20-day to give a little wiggle room if the stock were to pull back. The Dow isn't. So that's why that most recent swing low, which is what January 3rd was, that would be the stop. If I bring in the Qs, what would be the stop? Well, we're only a buck or so above the 20-day. I could go back down here. Again, if this is too much of a big distance, a big stop for me, I can pick a different number if I want, or once again, trade with reduced size. So I hope that helps. I do get questions on these trailing stops and, how do you know which one to use? You know what? Nothing's perfect, but I hope those 2 examples there can be helpful for you. Here's AMD. We've got above the 50-day today, target previous high, 23-ish, 23.5-ish. We're at 20, that's a little 10% pop. And how about ROKU? Remember I talked about this stock a little bit ago? Started seeing bigger volume bars. Now we got the pop. 25%'s a lot. I mean, holy mackerel. Their subscriber base apparently has grown. It's sort of coming into this little bit of resistance, but the 200-day is there, and then frankly, the gap fill. Here is something I would consider a 20-day EMA as a trailing stop. And how about Home Depot and Lowe's? I was going to talk about Home Depot last night, but there was too much other stuff going on. Here's Home Depot, got above the 50-day target, pretty much up in that 200-day area. Here is Lowe's, was rejected at its 200-day. Now that is interesting. So Home Depot looks better than Lowe's in this situation. The target up there now around 100, 4% or so. Then there's a gap fill up at 105. And here is a stock that got absolutely rocked. Medtronic down 6+%. Big red bar. I would say 77.50 to 75 is the target. Typically when there's that kind of massive decline, yes, you're outside the lower 2 standard deviation John Bollinger Band, but the volume was immense, lows of the day. It typically tells me there's more to come. So that could be potentially another big drop here for MDT. That is it, folks. Again, we are already at 2/3 filled for this webinar. We're probably going to max out. You got to register ASAP. You want to be there Wednesday, noon Eastern, 9 a.m. Pacific. First 5 minutes of going live, I'm going to show you these hottest stocks. I'll even use the stock we talked about a couple days ago. I'll keep that one a little hidden, if you will, unless you were in that video. But Netflix is one we talked about tonight. Certain stocks do certain things each year from a historical perspective. You need to know who they are so when they start moving, we can make that decision if we want to jump on them or not. It is, quote, the little treasure map. They do it over and over again. And I want to show you how that plays out. So make sure you're there Wednesday. I'm super excited. Again, register at the bottom of the video or in the email that we sent you. Have a great day, and I'll see you tomorrow. Bye-bye.